So today I'm going to show you a scalping strategy that basically works on every time frame, but today I'm going to show you the strategy on the 3-minute time frame, and you can make a couple of thousands of dollars, euros, pounds, whatever within a couple of hours. So basically it's pretty simple, and here it goes. So now here in front of me is the US dollar, Japanese yen, and first what I want to do, I go down to the 50-minute chart, which is here, and then I look for a trend, and I want the trend to be down, so I want a bearish trend. And here what I see, the market was bullish and then slightly turned to be kind of, this could have been a bullish flag and we could have broken to the upside, but what happened here is the market crossed to the downside. So basically the 200 EMA and the 50 EMA crossed to the downside, meaning now that the 200 EMA, which in my case here is the blue line, is above the orange red kind of line, the 50 EMA, I now know that the market is bearish and we have a downtrend. So this is my first indicator. Since we can see here, we broke the structure, this one right here, which was previous kind of a support and resistance area. We had this huge candlestick breaking, followed by this second huge red candlestick. So now I can identify that the market is bearish. Might not be bearish for too long, since if we go now and check the 1-hour chart, we can see the market is pretty bullish. So overall trend here in this case is pretty bullish. But for me, the important thing is I want the market just to be bearish for a short amount of time. It doesn't have to be for hours or weeks. Just this here is enough on the 50-minute chart. And then after I confirmed that we broke down and have a bearish trend, now I need a trend line, which here I take the highest point, which is around here. And the trend line is often a trend area, so it doesn't have to be an exact line. But here we can see I had here kind of a double top, so this could have been 1 and 2 touches or just one, depends. It can be 1 or 1 to 2, it doesn't really matter at this point, but I had here my first touch, my second touch, and here my third touch. Or if this was 1 and 2, then this would have been my third touch and this my fourth touch. So basically I want my third and my fourth touch to be at the trend line after we had a bearish sign. And here we can see the market perfectly pulled back to this area, which was my red candlestick that broke the last support area, which here is my confluence number 3. So first is the bearish downtrend. The 200 EMA has to be above the 50 EMA, so a bearish trend, confluence number 1. The trend line with the third or fourth touch, confluence number 2, and the third confluence for now, I want the market to come back to the area that broke the support, which is here this candlestick. So for our next confluence, I want the market, since here we broke above the 200 EMA, but this is a bearish trend, or it should continue bearish for the next couple of hours, even though, as we have seen, the long-term trend seems to be bullish. I want the market to again come below the 200 EMA, so that I know the market will continue to be bearish, since here we might still break to the upside. Since here we had this engulfing candlestick breaking the 200 EMA, the market might turn around. So now I'm waiting for the next indicator, which is here, this huge candlestick, followed by these two smaller ones, breaking the 200 EMA. So we want to add the MACD and the RSI. So here is the RSI just quickly. And now once here this red candlestick closed, we saw here below the 200 EMA, this area here is turning red and the RSI is below the 50 levels, and we can see here until this point the market here, the RSI and the MACD were trading below the 50 levels. So now I can assume the market is bearish for quite some more time. So once I know that the market will probably continue further to be bearish, I now go to the 3-minute time frame. So now on the 3-minute chart, I can see here, this was my third touch on the 50-minute chart, and here on the 3-minute chart I can see the market broke to the downside. This was the long candlestick on the 50-minute chart, and here I had my cross on the 3-minute chart. So here again I can see on the 3-minute chart the market is bearish, which is here my next indicator, which would be number 6 on the 3-minute chart. I want again a bearish trend. So once I know the market here is bearish, I need a trend line which would be around here. I had here my highest point 1, 2 touches, and here at this week my 3 touch, which here aligns perfectly with the wicks. And if I draw a trend line area, it would look something like this. So I take the wicks, I take the candlesticks to connect, and here the outer trend line, the wick, so I can see a perfectly fine trend line. So here is 1, 2 touch, 3 touch if we calculate the wicks, and my 1, 2, 3, 4 touch if we take the candlesticks. So now I have again the same confluence that I had on the 50-minute chart, with my bearish sign below the 200 EMA and the 3 or 4 touch trend line. So now for the 8th confluence or the 3rd confluence on the 3-minute chart, I had here a structure above the 200 EMA, which here was broken by this big candlestick. So this is the area where I want the market to return, and we see here after we broke this structure we returned perfectly to this area, and this is my confluence number 4. Now for the next move, I want this candlestick or any kind of candlestick. Once we here cross above the 200 EMA, I want the candlestick to close below the 200 EMA, and I want it to be a fully engulfing one, which in this case was this candlestick right here. So this big one. So now that I had this big huge candlestick on the 3-minute chart, which was fully engulfed, closing below the 200 EMA, now I go down to the 1-minute chart, and again I had the MACD and the RSI. And now what I'm looking for is for more confirmation on even the lower time frames, which would then be confirmation number 8, 9 or 10. I don't even know how many we had already, but here was the 3-minute candlestick, and I can see here the RSI turned the first time below the 50 levels, and the MACD area here turned red. So I can now assume that the market is turning to the downside and will continue to go lower. So this is here my entry. So if we go back to the 3-minute chart and go for a short, so I go here, take a short at the 3-minute chart with a stop loss above or at the top of this candlestick, and my take profit, my first one would be 1 to 2, and my initial one would be the previous lows that we had, which here in this case would be this area. So my overall trade would be a 1 to 3 risk reward ratio. And what I can see here again, once the market here pulled to the downside, we saw a retest and continued to the downside, which means here we can add further shorts to our market and again target the previous lows with a 1 to 3 risk reward. And then if we take a look to the right, we can see the market moved even further to the downside, but initially here is where I want my trade to go, and once it reaches this wick area right around here, so I can see now that the market on the MACD here is turning to cross to the upside between the blue and orange line, which would be here one of these wicks, which means this here should be one of your entries or exits to exit the market, so an entry to exit, so to speak. So then your take profit would have been at 2.8. If you have targeted if you target the lowest point here it would be a 1 to 3. But basically this was the strategy on the 3-minute chart, which basically works almost every time, and again it works even on bigger time frames. So hope you guys enjoyed the video. If you want to make money in future trading online, this is the strategy I recommend, and see you next time.